Hey guys, this is Scott Horne. In this video, we're going to be talking about traditional mortgage lending for investors out in the marketplace. So if you find this thing helpful, take a moment and like the video. Don't forget to subscribe to our YouTube channel. Make any comments below. We'll do our very best to answer those questions for you. Here with me today is Ross Wright. And Ross, what's that little tagline you use for your company?
Nobody beats myrates.com.
Great tagline. I love that. Great website. And it tells people exactly what they're getting, right?
Yeah.
That's awesome.
Tells the story, right?
Now, I know you're in the mortgage world. I know you're headquartered here in Dallas. Your company is actually national. And you do traditional mortgage lending. I know you do DSCR lending, both. And we've already explored DSCR lending on a prior video in depth for the investor out there. I just thought it'd be really smart to talk a little bit about traditional mortgage lending for the investor, because they are different animals, aren't they?
They are.
What is, just for the investor out there, what's the difference? Because I think some investors don't understand that.
So the dividing line is really, can we go what's called full documentation? So a full documentation loan is a loan to where you're showing your income, you're showing your tax returns, or at least your W-2s. You're showing your most current 30 days paycheck stub. So it's us fully underwriting the client, right? So the client is purchasing a house, which is the asset. So an underwriter is going to look at the client, and they're also going to look at the asset, the property. So on a full doc loan, which is conventional financing, or FHA, a VA, or USDA, the full documentation is showing the underwriter everything that they want to see in order to be able to qualify you. If we're going like a DSCR or maybe a bank statement loan, if you're self-employed, your tax returns are probably going to look quite different than if you weren't self-employed.
Oh, they do.
And so
mine do.
Yeah. Well, you're going to have your CPA write off everything they can, right? I mean, if it can be written off, why not take advantage of it? It's like using coupons almost.
It is, but whenever investors do that, and I get there, everybody's trying to save a buck here and there in taxes. What they have to realize, though, is it becomes a double-edged sword, because if you don't show the income in your tax returns and you're going full doc, that's a problem.
Yeah.
But the good news is your company, if you don't meet that, you can go the DSCR route also. So you've got solutions based upon who the client is and their situation. Now, why would I want to go traditional mortgage route versus DSCR?
It's a great question. A phrase that I've learned early in this career is risk equals rate, right? So the lower the risk to the person who's loaning you the money, the better the terms are going to be. And so when an underwriter is looking at your income and they're looking at what you've made for the last couple of years, because they're looking at your W-2s for the last 2 years, they're looking at your current 30 days paycheck stub, and they're saying, okay, here's a history of what they make, so we're making our underwriting decision based off of that. Now, if you say, okay, well, here's my credit score and it's awesome. My tax returns, however, show that I had a loss last year. And that's great when it comes to tax time, like you were talking about, but when it comes time to borrowing money,
not so much.
Because the underwriter is looking and saying, well, wait a minute, not only did they not make any money last year, but they actually had a $10,000 loss or whatever it was. And that's when it becomes necessary to do what's a DSCR loan or a bank statement loan. And all that means is that we're not going to be using certain aspects of conventional financing underwriting. The underwriter is saying, hey, you know what, we get it, you're self-employed, you made $400,000, you got a $30,000 loss, but in actuality, look, you've been putting $440,000 a month into your bank, right? And so I get the bank statements for 12 months that show a history of that. And then what the underwriter is going to do is say, okay, look, the average has been a $40,000 deposit. Maybe they run a dry cleaner or whatever it is they do. So they're going to take an operational expense out of that. Mm-hmm. So if you're making, say, $40,000 a month that you're depositing into your account, they may say, okay, well, we're going to use a 50% operation expense. So now they cut that income towards $20,000. And now instead of a negative, hey, this guy doesn't make any money, this gal doesn't make any money, as a matter of fact, she had a loss.
He's making $250,000 a year.
Exactly. And so now they're able to purchase the house.
Got it.
And that's 90% financing as well. So 10% down payment on a bank statement loan, and you're in business.
That's cool. Now, is that owner occupied or is that investor?
Either.
You can do a 90% conventional investment loan.
So great point. So when it comes to investment, then it's going to cap out at like 80, maybe 85%.
Okay.
Some investors with other particular things that can ratchet you up, like a great credit score. Yeah.
Okay. Well, no, it's what I see with all that stuff, Ross, is it's just great to have options. And so if I'm an investor out there, I'm looking at the differences between my traditional mortgage lending through conventional mechanisms or DSCR. And let's assume I do have the tax returns and I don't mind going full doc.
Right.
And I get the complicity of that, by the way. I tried doing a loan on my homestead when rates dropped down to, I've got a great loan right now that's almost paid off, but why not go ahead and get a 2% loan? Mm. When you're self-employed, I say, although I'm employed, but you have all these various companies and all this stuff, and they want everything. Mm-hmm. It's almost too much sometimes. Mm-hmm. At least it came in that way for me. It's like, this is too much of a pain in the rear. I'm done. But if someone's got the ability to do that 1003 application, they've got their tax returns, they look pretty decent on paper. Are you going to try to steer them towards a traditional loan, conventional versus a DSCR? And if so, why?
Yeah, my encouragement to them is going to show them side by side the different advantages and disadvantages of either or. And then I always tell people, picture me as a GPS navigation unit. We're establishing what the destination is. You want to buy this investment property. Mm-hmm. And then based off of our conversation and the data that I'm going to be collecting, I'm going to give you different routes on how to get to your destination. Okay. And then I'm going to look at that. I'm going to say, hey, look, this route is going to get you there faster, shorter time, blah, 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 right? But you're going to have to pay a toll, right?
I like that.
Yeah, I love tollaways, right? But I'm going to give you the different routes based off our conversation, and then I'm going to give you my recommendation, and then your hands are on the steering wheel, as I say.
Okay.
But the big determining factor, if I'm able to take them, so in our world, it's called QM loans and non-QM loans. A non-QM loan is a DSCR loan. It's a bank statement loan. It's anything that's outside the traditional 30-year fixed Fannie Mae, Freddie Mac product, whether it's VA, FHA, USDA, conventional financing. That is almost always going to be the highest and best value for a client.
Right.
But I do have sometimes, I smiled when you were talking about, I need this, I need this. Some are just like, you know what, how do I do this without showing that? And I'm like, no problem. And then I tell them, I say, okay, well, here's the cost of doing that. Because if you take the time to get your tax returns for the last 2 years or whatever, your interest rate could be this as opposed to that. So well-informed, show a side-by-side comparison, and then I'll let the client decide which way they
No, I like that. Yeah. And guys, if you don't know what QM means, that means qualifying mortgage.
Yes, correct.
Unfortunately, it's one of those little terms that the Dodd-Frank Act came up with. We got to think about today. And the mortgage guys are really in tune to that because they have to be. Mm-hmm. It's all regulatory requirement out there. So if you want to go a traditional conventional mortgage route versus that DSCR type lending or bank statement lending, you're probably going to get a little bit better interest rate because, as you said, risk versus rate.
Yes.
So you put up the money, put your money where your mouth is, you get a better deal. I got it. But it may also take longer and require a lot more effort to get there versus that short, sweet, and simple DSCR loan. I like the way you described that. Let them navigate the path they want to go on. Because everybody's path is going to be different out there. So when you're looking at this investment loan, it's an 80% loan to value. Are lenders requiring escrow today?
Since it's 20% down on a DSCR, you can waive escrow if you want to. So the answer to that is no, you don't have to.
Are you paying an additional fee to waive escrow today?
Usually in conventional financing, you do. I've got some investors that don't charge that. But usually in the DSCRs and the non-QM world, there's not an escrow waiver fee.
So I always find that kind of interesting. It's like I have to pay a fee, usually like a quarter point, not to pay escrow. Right. But it's just what they do, right? Yeah. No, it's just a way to make money.
Yeah, I've got my theory on it. I think that there's two things that can cause a problem. One is if you don't pay your taxes, right? The county supersedes the lien position and they can foreclose. And
That's your property taxes,
right? Exactly. And so the investor wants to make sure those are paid. And then the homeowner's insurance, right? If the house burns down, there goes the collateral. So if you're going to waive escrow, there's another layer of risk for the investor.
Yep.
So I've determined through just the same reasoning you are, like, why am I having to pay this? And so I thought it through and I see, okay, it's just a level of risk that they're building in.
No, and I agree with that. I get obviously a little bit higher interest rate for those kind of things because it could be more risk. And as a mortgage servicer myself, and I got to do this, I'm looking at that all the time.
Yeah.
Taxes, insurance, is it current? Is it the right kind of insurance? Don't give me a fire only policy. You got either a fire extended coverage or a full homeowners policy or something like that. So you bring to the table, though, for the investor out there, I'm just going to use the word, a full service mortgage company that can provide everything from traditional, conventional mortgages for the investor if they want to go that way. You can bring in that creative side of the business through the DSCR lending, which I understand you've got hundreds, not 5 or 10 or 20 or 30, hundreds of lenders that you can look at and help the investor navigate the type of loan they're looking for that they need today for the particular property they're in. Now, you do that not just in Dallas, Fort Worth, you do it in Texas, as well as nationally.
Correct.
And of course, you have loan officers spread out across the country too.
Yeah.
So easy stuff for the investor to look at and to navigate. So what else you got going on in the mortgage world you think that the investor community needs to know?
The investor community, there's just a ton of options out there. Obviously, you know what's happening in the market, and we're in a buyer's market right now. So a lot of buyers are on the sidelines waiting for the interest rates to come down. And in the meantime, you got investors that are snapping up the deals. That's what we're finding.
You know, I like that you just described that as they're on the sidelines waiting. And I remember some cartoon about this old man waiting to buy real estate for the price to come down. Yeah, no. Real estate will always keep going up. It's a hard asset. They ain't making any more of it, you know? Yeah, they make more houses, but the land don't get reproduced anymore. Unless you're in Dubai where they try to create islands, those kind of things. But no, and I get that. It is a buyer's market. It is time to act. It is time to do that. And of course, whether you're going traditional, conventional lending, DSCR, the investor's still going to sign off on it personally. It's just you want to go the route of putting up all the financials and go to that route versus the path of least resistance.
You know, at the end of the day, the investor is saying, hey, look, I don't have to have all this stuff. I get it. I'm going to do the make sense underwriting. As opposed to, I've got my little rule book, and if you don't fit into this, declined.
Yeah, it's a box.
Right? It is.
And if you're out if you're a
right
16th of an inch outside, you're done.
Oh my gosh, yeah, it's a decline with most investors, right? So that's why I'm always seeking investors that make exceptions or have this opportunity. Because the last thing I want to do is tell somebody who's counting on me to help them with their financing, I don't want to say no. As a matter of fact, you won't hear no from me. What you'll hear is, hey, we need to do this, this, and this, and then we're going to be able to close.
Ross, I love that. That's why I like right there because, you know, I have a rule in my office. You don't tell me no. Tell me how.
Amen.
That's how you want to get there. It's a thought process I think investors really need to adhere to. But just because there may be some negative things, it doesn't mean you cannot overcome them. Okay, sometimes there's going to be an added cost to overcome certain things. That's just the nature of the beast out there. I get it. But it is so awesome, though, to be able to stop and create options because most mortgage lenders don't want to do that. They want you to fit in that box, get in, get out, and go.
Low hanging fruit. I got the next deal to go to.
That's exactly what it is. Yeah. And I want someone who's going to take a little bit of time and go, hey, here's your situation, here's your problem, but here's how you can get over this. Here's what I think we can do.
You know, Scott, it reminds me, I was shooting pool with my son just the other night, and he's 21 years old. And as
I was going to say, hopefully not in a pool hall when he's 12.
And as he's shooting, you know, I can see the frustrated look on his face. And he looks at me and says, Dad, I don't have a shot. And I said, son, there's always a shot, right? There's always a shot. You got to find the shot. And then when you study and you think, okay, I can bank here, I can do this, right? And then you take the shot and you either make it or you don't make it. If you don't make it, hey, you took the shot. And the next shot that you're going to take, you're more skilled and honed in on. And I think I love analogies, right? And I think that really comes into this as well. As opposed to we're looking at the table and we're thinking, I don't have a shot, so I'm just going to slap the ball, right? And it is what it is.
Yeah.
It is what it is. And well, I'll tell you what, in our office, it is what it is. I don't ever want to hear that. I want to hear it takes what it takes.
Oh, I like that.
Right? So it is what it is. It's kind of like, well, I don't really have control over it. The universe is sending me that. As opposed to, it takes what it takes. Scott is counting on me to help him acquire this property that he has spent time, energy, money, blood, sweat, tears, and finding. And he's counting on me, who this is my wheelhouse, is giving you options. And when you said that word options, there is no better word. Options, options, options. Here's what you can do. And then here's what I recommend, right? Based off of our conversations. And then when I say, hey, I recommend this, there may be a little pushback and say, well, and I'll say, okay, well, yeah, that's a good point. Based off of that information, this is the better solution for you. But we're going to work as a partner, as a team, as opposed to what I call, this is my 25th year in the business, and I don't tell anybody to impress upon you. This isn't my first rodeo, right? I've kissed a lot of frogs in this business.
Dude, knowledge is power.
It is.
And you build wisdom over 25
and
years.
Following through and finding paths, finding the way, right, is what people are counting on. Or, this is what I tell loan officers when I'm hiring, or you can have the little microphone on and say, how can I help you today? Yeah, I'd like a 30-year mortgage. Okay, pull around. I'm sorry, the ice cream machine is down, right? I'm sorry, you don't have the tax returns, so the ice cream machine is down. Can't help you today.
Yep.
Right? No, I'm going to make sure the ice cream machine's working, and if you want ice cream, you get ice cream. I want to make sure that if you're an investor and you've got a portfolio of 10 loans, you've got maybe 10 properties, conventional finance is going to tell you you're tapped out. We're not going to loan anymore, right? As opposed to non-conventional financing. How many properties do you want to buy, right? And if it makes sense, do it. And I'll tell you, that also makes me think of this. So Nexa Mortgage, the company that I've worked with, one of the things I love, and by the way, we are the largest mortgage brokerage in the nation with the largest amount of investors of any brokerage in the nation. One of the things that I really admire about the owner of the debt-free company, by the way, is that he says, is it compliant? And does it make sense?
Pretty simple, isn't it?
That's it. And I'm thinking, if it's compliant and it makes sense, why wouldn't we do it? But I'm also a proponent. I always say I love gray area, swim around in it every day. Love it.
Again, every situation dictates a different scenario.
Absolutely.
And sometimes it may be compliant and it makes sense. But every once in a while there's a but what if?
Yeah.
And those little things pop up out there. But having the knowledge base and the ability to navigate that on behalf of the investor, because the investors aren't experts at it for the most part. They're novices. They're looking for someone to help guide them. But at the same time, not just saying, oh, you only can get this, that's it.
Right.
Which is some high interest rate loan that it may work, but it's not the best thing for them. But going, here's some other options you might have available. So they can pick and choose and make some decisions on is so important for the industry. And the industry needs good people to help steer. And one of the things that we do in our asset-based lending world is we just don't make you a loan. We just come out there, we guide you through the property, make suggestions, recommendations. We want you to be able to buy a good deal, be profitable, do it right, and give you the back-end strategies you need along the way to help you be successful and profitable. And it sounds like that you guys at y'all's company does the exact same thing, which is so important and is so needed out there.
Yeah, as we're talking here, it reminds me, we just closed on a client who was buying a new build house. The builder actually let her move in, knowing that it was going to close.
But it wasn't closed.
It didn't close. And as a matter of fact, they got declined, and then they got declined again, and then they got declined again. And the young lady that was getting declined, had talked to her friend about it. Her friend recommended her to Christy Cox, who is one of my loan officers. She called Christy, and so this young lady is a traveling nurse. And so you talk about moving parts as far as income,
Oh yeah.
right? Because they work 12-hour shifts, and they're only going to get paid this, and then they're working over here, and then there was a gap, and blah blah blah. So all those loan officers turned them down. And so here's a big thing that I really stumbled on. People, you don't know what you don't know, right? If you don't know, that's one thing. But if I tell you no, now you believe I can't get a loan. I can't get a loan. I was turned down, right? And so it's misinformation that is being tapped out by the person that you're counting on. So the person that you're counting on, you're either going to be empowered by their resources, or you're going to be limited by their resources. And again, by doing this for over 25 years, the last thing I want to tell anybody is there's not a path, right? And like I said, it may be, hey, we need to do this, this, and this, and then we can do this. But if it's something like a traveling nurse, who I always say there's a special place in heaven for nurses in the medical industry, right? When we can put our arms around their income, and then we have to represent that to the underwriter, right? And I likened it to an attorney who's petitioning the judge. Oh, yes, judge, but look at this, 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 and this, right? So it's interpreting that information for the decision maker. Because if the decision maker's looking at it, they may have a stock of files over here that's this tall, and they're like, okay, this doesn't make sense now, no, decline, right?
Move on to the next.
But if I lay it out to where I'm saying, hey, look, she's a traveling nurse, and here, and then this, and then this, and then this, and I give a narrative, I'm helping my client win. And at the end of the day, you're either winning or you're not winning.
Yep. And so often the answer isn't no. There are times where the answer is no, which I understand. That just sometimes that's just how it works.
Right.
But there is usually a solution if you have the right people to navigate that.
Yeah, that's true.
So I just want to make one last comment to bring up that little pool scenario. So it brings back memories when I was 16 years old, 17, and my old girlfriend would just literally clean the table with me. And on those kind of shots, and yeah, I couldn't make those shots anyway in navigating it. But guys, this is an awesome thing to hear. This is a tool that we in the investment industry really need, is access to good people, access to good information, knowing what our options are, knowing how we can navigate the financing of our properties, how we can get out of those high cost loans into much more reasonable loans, whether it's traditional financing, DSCR financing, and who knows, all various things in between. And having a quality company can help you navigate that and tell you yes, and rarely no, but if you do X, Y, and Z, we can help get you there.
Yeah.
So Ross, one more time, tell them your contact info.
It's nobodybeatsmyrates.com, and the telephone number is 214-214-ROSS. That's 214-214-7677.
Love that number too. So guys, hope you found this helpful. If you did, take a minute and like the video. Don't forget to take a moment and subscribe to that YouTube channel as well. Make any comments below. Be happy to get back with you guys, and we'll see you all next time.